guys, my name is Maddie and welcome to this new video series. Welcome to Off the Record. In this video series I'm going to explain topics that are related to our digital economy, but I'm going to explain them from a different point of view, a different perspective. A perspective that you don't get from the daily newspaper or from the television. So you probably clicked on this video because you really want to know if gold is an interesting asset for your portfolio in 2020. And before I can explain if it is an interesting investment, we really have to look back at history, because history tells you something about the future, of course. It always does. And if we look back at history, gold has been a payment method for over centuries. Gold has been used as a payment method since we stopped bartering. So we could use coins in the form of gold. And gold is interesting because it's a precious metal with timeless, tangible value. And that's why it's still very popular. And that's not the only reason, but it's also very popular because gold is really scarce. The scarcity of gold is really high, and something that's scarce has value. For example, if you and I go to the bakery together and there are 10 pieces of bread and we both want to buy one, then the price will be around $2 a piece, $2 a bread. But if we go to the bakery together and there are 20 other neighbors that also want to have bread and there are only 3 breads available, the price of the bread will go up, maybe even up to $10. So something that's scarce has a higher value than something that's not scarce. And the same works for our monetary system. Let me explain it really easily. Every day there is money flowing into the economy, and they call it printing new money. Let's call it like that. So every day, every hour, every minute, there's new money flowing into the system, and we call that a deflationary system. And with this deflationary system, our purchasing or buying power goes down. So if there is more money flowing into the system, the inflation rate will be higher and the purchasing power will go down. That's why our products in stores will rise every year, and if our salary doesn't rise with it, the expenses will get higher. So everything will be more expensive in a deflationary system. But if we look back at history, it wasn't always like that. At this time, the central bank can print as much money as they want. But between the gold coins and the fiat money, there was also a system where gold was coupled to money, to paper money. For example, 100 years ago here in Amsterdam, I'm Dutch, I'm from Amsterdam, hello. 100 years ago here in Amsterdam there was a bakery, and it was nearby my old house. And when the owner of the bakery got his money in the early 1920s, I thought, or 1910 maybe even, when he got his money, he ran to a bank as fast as he could because he wanted to exchange it back to gold. Because in the early days, a piece of paper was the proof that you had the right to get the gold. But it wasn't always like that. After that, people started to trust the piece of paper. So if I paid you 5 guilder or something like that, you knew it was 5 guilder in ounces of gold. But in 1971, they let the golden standard go. And they did this on purpose because they wanted to have more money flowing into the economy. And if there is more money flowing into the economy, you need to have it backed by gold. Or at least until 1971, they had to have enough gold to print enough money. But they wanted to bring more money into the economy. And since they let the golden standard go, the inflation rate went high as hell. But even though gold wasn't coupled to paper money at that time anymore, it was still interesting, and it still is, because of its scarcity and its timeless and tangible value. So even though the system resets, the money system resets after 30 or 40 years, still gold is a really interesting subject to talk about, because it's been here for centuries and it still remained. So over the last couple of weeks, over the last couple of months, something interesting is going on, because central banks always had gold in their portfolio. They kept it even though gold wasn't coupled anymore to money, because we had fiat money, which wasn't coupled, so they could print as much money as they wanted. And that's interesting, because why would you like to own gold if it's not necessary anymore? You could just print whatever the hell you want, and that's enough, right? 2 or 3 weeks ago, one of my friends that is a professional trader in gold and has a gold fund as well, he found something on the website of the Dutch Central Bank. And the Dutch Central Bank stated something like, in case the monetary system, the financial system collapses, we can always start over again with gold. And that was the first time in history, or the first time that I personally heard from a central bank why they still owned gold. So the central bank owns gold so they can start all over again. And now something interesting happens over the last couple of months, or even years, but especially the last couple of months. Central banks are buying more and more and more and more gold. So that does ring a bell, because why are they buying more gold? They don't need to. The only thing that came in mind was they're buying gold because they need reserve to start over again. There was no other option. Because of the printing of fiat money, there are bubbles everywhere. I don't know if you've noticed, but on the housing market there is a bubble. On the bond market there is a bubble. On the stock market there is a bubble. For example, the money that's being created goes to bonds, and not only to government bonds. So if companies get money, they will use it, for example, for stock buybacks. So the price of the stock goes higher instead of lower, and that's why the central banks are creating bubbles. The interest rate is very low, so loans are really easy to get. The interest rates are low, so there are bubbles everywhere. And there are some things that are going on which are really important to notice. A couple of weeks ago, 6 old central bankers from all over Europe published an article about their opinion about the way the ECB was going on the monetary system. And the ECB wants to lower the interest rates and print more money. They are saying things like, if you keep doing this, it will end in a not in a good way. So you could read from the paper that they were really, really scared, and I will link it down below. If you read the paper, you know that it's very necessary to dive deeper into this subject. So that's what I did, and I found something really interesting, because there were more people from other central banks that were saying things like, I've never seen so many things falling at the same place. The bond market, the stock market is not only a credit crisis anymore. There is so much coming all together, and they were really scared. That was all over the paper. I will link it down below. You can read it yourself, because it's really important to do your own research as well. I must say, I'm not your financial advisor. I'm only telling about what I found. But okay, there is something more, because we're reading a lot the last couple of weeks about probably an economic collapse or a decline. And we've seen it everywhere. Even the German economy is slowing down. All the economies in Europe are slowing down. There are problems already, even though the interest rate is still very low. So what we see is that the news media are telling us there is something going on. We're not really sure what it is, but yeah, we might see a recession. But the old central bankers are telling us this is not a recession, it's gonna be a crisis and maybe even a big depression if the ECB keeps doing what it does. And I think that we can see this if we look at big investors, for example. And if we take Warren Buffett as an example, we saw that he switched all his assets, or at least a lot of his assets, to cash. To be honest, I really don't see a reason why I would switch my position to cash. The only reason why I would see myself doing it is because the stock market, the bond market, the housing market is too much of a risk. And that's probably what he sees right now. Why would you put your money in a deflationary system you know you will lose already by looking at your money in the bank? He sees that the stock market is really big of a risk. He sees that the bond market is really big of a risk with negative interest rates. So he's going all to cash, or at least a lot of his position is going to cash. If we put all those things together, so Warren Buffett, the stock market, the housing market, the top 6 central bankers in Europe, the low interest rates, the central banks buying more gold, more and more and more gold. And the last one, we see that the new elections are coming, which will make investors really insecure. You can see gold as a safe haven. If there is something going on in the economy or politically or in politics, people will start putting money to gold because it's safer. It's a safe haven and it's a hedge against everything else in the economic system. So the elections are coming and people are really nervous if Trump will win. And I think this is another reason why gold will get more interested over in 2020. So there are 6 things coming together and we need to see the helicopter view. Make sure to do your own research. The only thing I want to say is if the central bank is investing in gold and gold isn't coupled anymore to the financial system, why shouldn't you? And this is not financial advice. Ask yourself, why shouldn't I protect myself against this deflationary system, against the possibility that this economy could collapse? And keep in mind all of the signs I've just told you and make sure to do more research about this topic. Make sure to do more research about what's going on and dive deeper into the news that they tell you on television and that they tell you in the daily newspaper. So this was my subject for today. I think I've answered your question very well. There's a lot going on. And if you have more questions about this topic, make sure to put it down below. Let me know what you think of this video because it's the first one on my English channel. I must say, I'm still not really chill with talking English, but it will come. I'm sure it will come. And if you like this video, make sure to put your thumbs up. If you have any suggestions for the video of next week about digital economy and especially the off the record part, make sure to put them down below as well. And if you want to get notified next week when there's a new video online, press the subscribe button, and if you click on the bell you will get notified when there's a new video online. I hope to see you next week, guys. Thanks for watching. Bye.